All right, folks, welcome back. This is our midweek review for the ICT Mentorship. Dollar Index weekly chart. I'm going to go through this rather quickly tonight. I have something I have to take care of, and I'll give you a little bit longer one tomorrow and on the weekend. All right, so we're looking at the weekly chart. I mentioned that this was the imbalance that it may reach up into, and it actually went through that a little bit, and then small little gap in here. You can pull this up on your own weekly chart. Small little fair value gap in here, and closed in that beautifully. You'll see it when we get in the lower time frame. Daily chart here. Again, you can see going through the weekly objective I was giving you for this week. Went through it right up into the fair value gap on the weekly chart. That's just brilliant delivery of price. So we had a bullish week on dollar. It has met our objectives. I also mentioned last night that there was no need for me personally, there's no need for you or any student in here to push the envelope to try to find an additional trade or two, because the analysis has delivered. So by delivering price as it did this week in dollar, it removes all of the urgency for price to send foreign currency lower. Hourly chart, dollar index. Again, you see how it delivered right up into that weekly fair value gap, which was above the objective I said would be mine for the week. So what does that mean? It means that I lose all of this opportunity, and I'm okay with that. The question you're going to have to ask yourself is, do you have that resolve to say, okay, I don't need to have every piece of the pie. I don't need to be in here every single day. And if you miss these types of continuations, does it completely ruin you? Or you just accept it and say, okay, that's just something that wasn't part of my personal plan. And there's nothing wrong with that. But the problem is as you're developing these impulses to want to be a part of everything and get every last drop of blood out of these moves, it's unrealistic. It's something that is going to create more problems than solving solutions. It creates greed, or a pursuit of greed, okay, or fear of missing out on that last piece of the move. 15-minute time frame, again, just really nice run up into that. Notice the body's respecting that. With time frame, 15-minute bellwether. Okay, that's why I like the 15-minute time frame. A lot of algorithmic trading takes place using this time frame. Hit midnight, we drop down. The old weekly imbalance, premium high, acts as support here. It rallies a little bit. One more time in here, and then drops down into another level that I've been focusing on with you. And it found some support there as well. Small little fair value gap in here. I don't know, frankly, if it's going to continue higher or if it's going to go lower and tag this. So I'm comfortable saying I don't know. It's one of those moments where I want to kind of really emphasize and reinforce the idea that because the analysis that I would be looking for and what it's looking for has delivered, once it does that, then we're in transition. Now, transition means it can go sideways, it can reverse, or it can go higher. And because I don't have enough information right now to determine which one that is, I have to wait for more information. That's not weakness, that's wisdom. Okay? So that's why it's going to be a quick video tonight. Euro dollar, weekly chart. Low, high, that's your imbalance. You can see we traded off of consequent encouragement on that run there. So I think ultimately if the dollar continues to go higher, euro dollar can trade down to this level here, below 112. Okay, here's the daily chart. Again, we had a continuation lower with the higher run on dollar, and then it came off that low, and now we have an indecisive candle. But again, me personally, I think it would favor at least a retracement back inside of this imbalance here. Does it need to come back up to here? I don't know. And that's the problem I have right now at the current market structure where we're at in the week and what we've done so quickly in the beginning of the week. So here we are Wednesday. I don't need to trade on Thursday. I don't need to do anything on Friday. So if I did anything, it would be scalping. Let's go to the hourly chart. And again, here is the consolidation day. Okay, it came down aggressively, but then a changeover into the new day in New York. Basically just been a consolidation day. And that is the power of understanding what you're looking for the week, for the weekly range. Now, I'm not suggesting or implying that the weekly range is capped. Okay, this could go lower and the dollar could go higher. But I don't have visibility on that idea at the present, and I don't need it. So this is how you manage that tug of war, that psychological impulse that I have to be trading. I have extra days in the week before the weekend. I made money, or I did profitable trading, or I didn't lose money, and I need to get in here and find something. No, you don't. I don't either. So obviously I look like a hypocrite today because you've seen I ran up this paper trading account even more today, but it's just putting a punctuation point on YouTube. But you do not need to find another trade. But if I do anything on Thursday or Friday, it would just simply be in the form of a scalp, like 10 to 20 pips. Euro dollar, 15-minute time frame. And again, you can really see we just had a consolidation day. So we dropped hard overnight, or during Asia. And then we had midnight consolidation. British pound, I stripped everything off this chart because this one here has me basically sitting on my hands. I don't have any opinion because you know what we've discussed in regards to euro pound. That's the manipulation on this pair. So since it's being heavily manipulated, either you're going to look at scalps running buy stops. As I mentioned last night, it's either going to reject going lower and just consolidate, or run buy stops. And we'll see that when we go in the lower time frame. But we have a bearish order block in here. It could bump up into that and make an attempt to go lower if we get some higher run on dollar, since the euro pound's completed its market maker sell model, which we'll look at after pound dollar. All right, and the hourly chart on pound dollar. Again, just pressing higher, running buy stops. There's a small little gap here with a bearish order block. That to me has my attention. So does it want to reach up into that and then give it a reaction? Maybe take the sell side here. You know, it's something I'm watching, but I'm not trying to engage pound. Okay. 15-minute time frame, British pound. Again, it sunk a little bit with euro loaded last night. Took out the relatively equal lows. Sell side taken. Rallies. Break in market structure. Bullish. Drops back down in. Small little gap. Right there. You see that? Right there. Returns back to it with the down closed candle, bullish order block. That's the pattern right out of YouTube, with the exception of the fair value gap, obviously. Optimal trade entry. Rallies. Buy side above relative equal highs. And reaches into that. So buy side liquidity, buy stops, keep getting tagged. Euro pound daily chart. As you can see, we have a beautiful market maker sell model to completion. And back to that 4-hour chart, we can see a little bit more detail. Runs up, smart money reversal, low risk sell, distribution, redistribution. Again, second level distribution. That's going to be the heaviest wave of selling and the largest magnitude in terms of speed and distance. And there we got it. Just beautiful run right to where the liquidity was, right where I was pointing your attention to. NASDAQ 100 daily chart. As I mentioned, fair value gap. We would likely see it go through that. Today we've seen it open, trade down, find some support there, and start to rally. I still favor the idea of running above this high here. And the indices today were a little mixed. The Dow and S&P were decidedly weaker against the NASDAQ. NASDAQ just kept pushing higher, 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 higher. Finally, when it hit the 16,400 level, it gave up the ghost, snapped lower. And I was all over that. So we're looking at the hourly chart here. That imbalance on the daily chart. You can see we had support here. Here, creating the low day after taking out short-term low. So New York Stock Exchange opening 9:30. It's dropping down, taking sell side out, trading inside of the imbalance here and the shaded area. Okay, see that? This low, this high, fair value gap trades down into that, takes the sell side out and back into that daily imbalance. Notice that this is not supply and demand again. Okay, these are imbalance levels that once they're rebalanced, they become structural support and resistance the way you would expect traditional support and resistance lines. So it gives you X-ray view, okay, kind of like a perspective on price that you wouldn't otherwise expect. And then price rallies up. And notice this. See that? Relative equal highs. I honestly expected that to be tagged today. Okay, and we have a fair value gap right there as well. So there's lots of draw here. But if it's going to go here, I wouldn't be surprised if it just bumps above here or explodes through it. You know, I don't see a top forming here. I'm trying to convince you that avoiding picking tops is the best play to do. And it just keeps delivering like gangbusters. So it's proof of theory. 15-minute time frame. Overnight, you can see we've consolidated relative equal lows. We drop down at 9:30. We run the sell side into the imbalance again. External range liquidity, rallies, order block, expansion, almost immediate rebalance. You see that? Then expands on the upside, runs into the 16,400 level, and right at the noon hour. So do not trade in that portion of the day. You have to take profits. You have to take profits ahead of the New York lunch hour. Otherwise, you get that. Now, imagine how demoralized you'd be if you bought in here thinking, I'm smart. This is great. This is running in my favor. And then I'm going to hold through the whole day. And then you get this. That's how the indices wipe the floor with people that are greedy. And just because you may be bullish doesn't mean the daily ranges is going to keep on going higher, maybe consolidate during lunch. It can do this, but many times when we're in conditions like what we had today, where the Dow and the S&P were trading lower majority of the time of this rally here. So this was a suspect rally. All they were doing is digging in on the liquidity over here. So they push, and then we had this collapse down in the order block. So that's going to be it for today. Just basically a review, not really teaching too much, not really giving you too much in terms of what I think is going to happen because I'm neutral. Try to find comfort in these periods where I'm illustrating being neutral and not demanding too much from yourself in terms of trade setups. Okay, at least from a swing trade or short-term trade. Intraday, there's always that potential. You know, scalping 10 to 20 pips, that's always going to exist, you know, in any market environment. But I'm trying to cultivate in all of you the idea of looking for the highest probability trading conditions on short-term to swing, because those will give you the framework to capture just about any kind of trade. Okay, so until I talk to you tomorrow, be safe.